Good evening. Today, we're exploring tariffs, taxes placed on imported goods. Tariffs are used by governments to protect local industries and jobs by making foreign products more expensive. They can also serve as leverage in trade negotiations, sometimes sparking trade wars when countries retaliate. While tariffs can help domestic businesses, they often lead to higher prices for consumers and uncertainty for companies. Governments may also use tariffs to generate revenue, but this is less common in large economies. The decision to impose tariffs is a balancing act: protect local jobs or risk higher costs and international tension. When tariffs are introduced, they disrupt global supply chains, forcing companies to rethink suppliers or pass costs to customers. For example, a business relying on foreign parts may need to find new sources or raise prices. Tariffs can reshape industries and alter long-standing economic relationships. They're powerful tools, but their effects ripple through economies, impacting everyone from manufacturers to everyday shoppers. Ultimately, tariffs are about control, governments trying to influence trade for national benefit. But every action has a reaction, and the consequences can be far-reaching. Understanding tariffs is key to understanding the global economy. Recently, Canada introduced new tariffs targeting specific American-made goods. This move is a direct response to ongoing trade disputes and perceived unfair U.S. practices. The tariffs focus on products like steel, aluminum, agricultural goods, and consumer items such as washing machines. Canada's strategy is to pressure key U.S. sectors, hoping to bring the U.S. back to the negotiating table. This marks a shift in Canada's approach, signaling a more assertive stance in defending its interests. The timing is critical, as global supply chains are already strained and inflation is rising. For businesses on both sides, these tariffs add new challenges and uncertainty. Canada's decision reflects a belief that action was needed to protect its industries and rebalance trade. The move underscores the complexities of one of the world's closest trading relationships. It's a calculated risk, aiming for a fairer deal but raising the stakes for both countries. American businesses exporting to Canada are feeling the impact of these new tariffs. For many, Canada is their largest market, so higher prices mean lost sales and shrinking market share. Industries like whiskey and steel face tough choices: absorb costs or pass them to consumers. Small and medium-sized companies are especially vulnerable, with slim profit margins. Many are lobbying the U.S. government for a diplomatic solution, arguing that tariffs hurt both economies. Some firms are seeking new markets or even considering moving production to Canada to avoid tariffs. The uncertainty makes long-term planning difficult, disrupting a vital trade relationship. Businesses thrive on predictability, and these tariffs have introduced significant instability. The pressure is mounting for a swift resolution. Tariffs don't just affect businesses, they hit consumers too. When tariffs raise the cost of imported goods, companies often pass those costs down the supply chain. For example, U.S. tariffs on Canadian lumber mean higher prices for home builders, which get passed on to home buyers. The same goes for cars, groceries, and everyday items. Small price increases add up, fueling inflation. Families may notice higher bills, especially if they buy products now subject to tariffs. The impact isn't equal for everyone. It depends on what you buy and how reliant you are on cross-border goods. Over time, widespread tariffs can make the cost of living noticeably higher. For those already struggling with expenses, these increases can be especially tough. The longer the dispute lasts, the more prices will rise across the board. Tariffs may start at the border, but their effects are felt in every household. Trade disputes have real consequences for American workers. When companies lose sales to Canada, they may cut production, reduce hours, or lay off staff. Industries deeply connected to Canada, like automotive and agriculture, are especially at risk. A single tariff can disrupt entire supply chains, threatening jobs in factories and on farms. Lower exports can mean surplus goods and falling prices, hurting farmers' incomes. While some argue tariffs could bring jobs back to the U.S., this process is slow and uncertain. In the short term, the most visible impact is job loss and economic disruption. Family farms and manufacturing towns feel the pain first. The human cost of tariffs is immediate and widespread. Protecting jobs at home is complex, and sometimes tariffs do more harm than good. From Canada's viewpoint, these tariffs are a defensive move to protect their economy. Canadian leaders argue U.S. trade actions have put their industries at a disadvantage. The goal is to pressure the U.S. into fairer negotiations, not to escalate conflict. By targeting sensitive U.S. sectors, Canada hopes to create leverage in talks. For Canadian workers, tariffs can mean more competitive local industries and job security, but there are risks. Canadian manufacturers relying on U.S. parts face higher costs, and consumers may pay more for American goods. Canada is betting that short-term pain will lead to long-term gains. The strategy is high stakes, reflecting the challenges of dealing with a much larger trading partner. It's about asserting sovereignty and ensuring Canadian voices are heard. The outcome will shape the future of North American trade. The future of US-Canada trade is uncertain. Both countries must decide whether to negotiate or let tariffs become the new normal. The best outcome is renewed dialogue and compromise, restoring stability for businesses and consumers. If the dispute drags on, supply chains may permanently shift, making trade more costly and less efficient. The economic ties between the two nations run deep, built on shared values and history. There's hope that cooperation will prevail, but the coming months are critical. The choices made now will have lasting effects on jobs, prices, and growth. This is more than an economic issue. It's about the future of a vital partnership. Diplomacy and mutual understanding are key to resolving the conflict. The stakes are high for everyone on both sides of the border.